Hi guys, welcome to my video on SA 320 materiality in the planning and performing of an audit. So the first thing that I'm going to start off with today in a different manner, slightly different manner, is we're going to understand why do we compute materiality. So I think this is a very important discussion. We just kind of learn this standard without understanding why do we need to compute materiality, what is the importance of materiality. So we're just going to discuss that first. Okay. Excuse my handwriting. Okay, so first of all, uh, what is the auditor set out to do? Okay, wait, why do we do an audit? We do an audit to give users confidence in the FS, to give users confidence in the FS. Financial statements are prepared by the management, but a management could manipulate the numbers and the users of the financial statements may not be able to trust those financials, which is why an auditor does an audit. An independent audit is carried out to give users confidence in the financial statements. For this, what has the auditor to do? The auditor has to, for this, the auditor has to check the FS. Now, what does the FS comprise of? Now, the FS comprises of, you have your balance sheet and you have your P&L. All these numbers will be there. Here also you'll have some numbers and you'll have your cash flow, you'll have your statement of changes in equity and your disclosures and notes. But your main thing will be your balance sheet and your P&L. Now we have to check that every number that is appearing in the balance sheet and the P&L is correct. For this, what we are doing, check numbers in the FS. We are going to check the numbers in the FS whether they are correct or not. To check the numbers in the FS, can we sit and check every number? We cannot. Now let's say, for example, in this balance sheet, I'm just drawing a rough, very rough balance sheet. You have 10, you have 20, you have 30. So you have one head which is 10, one head which is of amount 20, 30, 40. You have something in the asset side for 1, you have something in the asset sides of 56. Different numbers I'm just taking. So we cannot sit down to do audit of each number. We need to understand what we have to audit. So basically what we have to do is, don't check unimportant items. That is the basic segregation we are trying to do. We are trying to identify what is important, what is unimportant. What is unimportant, we are not going to audit that. So how do we identify now what is unimportant? For this, we compute materiality. So one thing is materiality helps us to identify what is important and what is unimportant. So if I had to write here now, materiality first, identify what to audit. It helps us to identify what do we want to audit. It helps us to identify what to audit. And the second point is identify if misstatement is material. So let us say, for example, I determine a materiality of 5 lakh. So if I get a misstatement of 6 lakh, we know that that misstatement is a material misstatement. If we get a misstatement of anything below 5 lakh, like let's say 4 lakhs, we know that that's an immaterial misstatement which can be ignored. So this is like the basic reasoning behind why do we compute materiality. We compute materiality in order to know what to audit in the financial statements, and also to identify if the misstatements that we locate in the course of our audit, they are material or they are immaterial. I hope this gives you all a good background as to the standard and why the standard is come into place. So now let's go to our PDF notes. Okay, so in this part, we are going to determine how do we compute materiality. So this thing is not discussed in the standard actually, if you see, but this is how it is practically done. We will try to understand how materiality is computed in order to appreciate better the concept of materiality and to understand why is materiality computed, what are the different thresholds in materiality, and just be able to appreciate this standard more better. So first of all, for computing materiality, we first decide a particular benchmark. Now, a benchmark can be profit before tax from continuing operations, total revenues, total assets. Other benchmarks that you could use are total incomes, total expenses. So any of these benchmarks you can use for determining your materiality. Next step is, after you have got your benchmark, you will decide materiality percentage, and this materiality percentage you will apply on your benchmark. Now, how much is materiality percentage? Typically, it is 1 to 5 percentage. So let's say your benchmark of PBT co is 5 lakhs. So if you apply 5 percentage, you will get 25,000. So that will be your materiality percentage. Decide performance materiality percentage, and the last step is decide AMPT. AMPT is audit misstatement posting threshold, or it is also called clearly trivial threshold. Now, PM, so if you want to see PM, if you want to understand PM and AMPT, you can understand PM as the upper limit and AMPT as the lower limit. These both are determined as a percentage of materiality. Now understand, materiality is determined as a percentage of the benchmark, PM as a percentage of the materiality upper limit, and AMPT or clearly trivial threshold is determined as a percentage of the materiality, which is the lower limit. Okay. Anything below AMPT is clearly trivial. You can just ignore it. If you find a misstatement or anything that is below AMPT, you can just clearly ignore it. And let us try to understand the difference between materiality and PM, but we will understand this in the next slide with the help of an example. So let's see the example now. Now, if you see this computation, the benchmark is profit before tax from continuing operations, which is 50 lakhs. Now, we have applied a materiality percentage of 5, which is giving us 2,50,000 of materiality. Now, PM and AMPT, I told you, both are computed as a percentage of the materiality. So, PM, if you see 75 percentage of materiality, which is 1,87,500, and your clearly trivial threshold is 5 percentage, which is 12,500. So if you add your PM and AMPT, it gives you 2 lakh, which is 80 percentage of your materiality. So you can tally it like this also by adding your PM and AMPT and checking that it is 80% or whatever percentages you have taken, it is properly coming. Okay. So now let us try to understand why do we compute materiality and then why do we again compute PM. Sorry, 1 second. Okay. So materiality is the reporting threshold. Now, what do I mean by this? To understand if a misstatement is material or immaterial and to determine whether I need to qualify or give an unqualified opinion, materiality will be 2,50,000. So let us say if I have at the end of my audit, if I have a misstatement of 2,60,000 which is not corrected by the company, then I will qualify my opinion. But if I have a misstatement of 2,40,000 and the company refuses to correct it, it will not be a material misstatement. It will be an immaterial misstatement, and I will not need to qualify my opinion. Now, performance materiality is something that we constantly use on the client. It is like a working materiality. Now, why do we say 1,87,500? Because subsequent to the audit, if we determine, now let's say that I have a misstatement of 2 lakhs. So it is above my PM. So I will try to correct it and bring it down to 187,500. So subsequently, if some misstatement is detected, I still have a tolerance level between 2,50,000 and 1,87,500. But let us say if my materiality, I stick to 2,50,000 only during the client, during my audit, and later if I come to know some error that takes my total amount of errors about 2,50,000, then my audit will go for a toss. That's why we determine PM, which is sort of a working materiality. We use it during the audit. So this is the basic difference between materiality and performance materiality. Okay. So now let's go to my notes. Okay, so now let's read in the notes. Essay 320, materiality in the planning and performing of an audit. If you see the notes, it's only a one pager, so it's not too long. Shouldn't take a lot of time. So the first concept is materiality. Now, first of all, first point, determination of materiality is a matter of professional judgment. Where is the concept of professional judgment discussed? SA 200. We saw this in my video on professional judgment, that determination of materiality is a matter of professional judgment. There is no fixed percentages that someone can tell you that materiality should be 5% or 10%. It is your professional judgment that you will apply. For an example, if I can tell you, if let's say last year some errors were detected in the audit, or let's say the controls of the client are weak, we will take a higher materiality percentage. But last year, if you have not detected any errors, and if you have not found any errors, we will take a lower materiality percentage. Not found any errors or controls are working fine. Okay. Second point, the concept of materiality is applied by the auditor both in the planning and performing of the audit and in evaluating the effect of identified misstatements and uncorrected misstatements on the audit. So first we will evaluate the effect of materiality on the identified misstatements. Misstatements first will identify, and then you will try to get them corrected, and you will check that the uncorrected misstatements are below materiality. So that is why we say in evaluating the effect of identified misstatements and uncorrected misstatements. My identified misstatements first I will accumulate. Out of that, I will try to correct some misstatements, and in the end, I will check that my uncorrected misstatements are still below my materiality level. So let us see this point again. The concept of materiality is applied by the auditor both in the planning and performing of an audit and in evaluating the effect of identified misstatements and uncorrected misstatements on the audit. Point number 3, in planning the audit, the auditor makes a judgment about the size of misstatement that could be material. So this is again like the first point, professional judgment we have to apply. Point number 4, very important, misstatements can be considered material even if they follow below materiality in rare cases. So there is no thumb rule that if your misstatement is below materiality level, it is always immaterial. You can still consider it material and ask the client that we want this to be corrected. This cannot be uncorrected. Next answer, performance materiality, short form PM. PM means the amount below materiality set by the auditor to reduce to an acceptably low level the probability that the aggregate of uncorrected and undetected misstatements exceeds materiality. So like I said in my example, we saw our materiality was 2,50,000 and PM was 1,87,500. So let us say tomorrow if there are some today we know there are uncorrected misstatements, but tomorrow if we detect some misstatements, they will go undetected. Today we have uncorrected misstatements and tomorrow there will be some undetected misstatements, so that total should not go above materiality. That's why we have a level of PM, so that we have a tolerable deviation. That deviation is tolerable, the deviation between 1,87,000 and 2,50,000. But if our uncorrected misstatements go above 2,50,000, that is not tolerable, then the audit goes for a toss. So that is why PM means the amount below materiality set by the auditor to reduce to an acceptably low level the probability that the aggregate of uncorrected and undetected misstatements exceeds materiality. It could also refer to the amount set by the auditor at less than materiality level for a particular class of transactions. Class of transactions is your P&L, account balances, balance sheet, or disclosures. So you could also set a lower PM to audit certain captions. Okay, so the next answer is revision of materiality. So now what this basically says is the auditor should revise materiality in the event of becoming aware of information that would have caused the auditor to determine a different amount initially. So let us say, for example, when you're auditing the financial statements, you become aware of a lot of errors that are there in the financial statements. So in this case, for example, in the example that we did, we saw materiality at 2,50,000. Now, if at 2,50,000 you have kept your materiality, and below that amount, if you are finding a lot of errors, you may want to lower your materiality. You may want to make it 1 lakh. So that everything above 1 lakh comes into the purview of your audit. When your materiality was 2,50,000, only things which were above that amount you are auditing. But now by setting it at a lower amount, that is 1 lakh, you will have to audit everything between 1 lakh and 2,50,000 also, and above 2,50,000 you are anyways auditing, so that you identify more and more errors. So what is this point saying? If you become aware of any situations that would have caused you to determine a different amount initially, you should revise your materiality. Last answer is documentation as per SA 320. What do we need to document? Number 1, we need to document the materiality. Number 2, if applicable, lower level of materiality determined for a particular class of transactions, account balances, or disclosures. Third point, PM, performance materiality. Fourth point, any revision of materiality as audit progress. So if you see, this is coming from all the answers above. first point, materiality, that needs to be documented. Then PM ka both points, that is PM needs to be documented, and also if you have set any lesser materiality for certain balance sheet items, P&L items or disclosures, you need to document that. And the third answer was division of materiality, which also you have to document as per documentation required by SA 320. So this is your standard on SA 320. I hope you all have been able to understand this standard very well. Thank you and hope to see you in my next video.